triangle trend indicators for NinjaTrader on 5/8/2013 on the ES2 Renko. I thought I would show you this setup this morning because it's such an obvious trade that presented itself about 12 minutes after the market opened at 6:30 here on the West Coast. When you see a setup like this, as I've tried to illustrate by putting this vertical line through the chart, there's better than a 90% chance that it's going to be a profitable move. First of all, the swing cycle turned green and moved up here. Now the swing cycle is a leading indicator. When it moves up like this and turns green, indicates momentum is moving up. So you've got a very good clue that the market's going to go up here. Now with conventional indicators, you would, when it goes all the way up here, you'd be a little bit concerned about being overbought. But here's the variable band here, and you can see it's way down here. So it's not until you get up in this area here that it becomes overbought. Now the swing cycle crosses below the variable band right here, but it stays green. So you see momentum is still up. Then it comes up here, and when it crosses below here, it's red. Now you can do one of two things here. You can get out of this trade here because it is swing cycle is showing it's overbought here. Also, it reached the top of the linear regression channel right here. So depending on the type of trader you are. Now I put this vertical line down through here, and you can see the DMI differential is, everything is green. It's above its zero line, indicating an uptrend right here. It comes in very early here. And once you're in a trend, very often you can stay in trend longer when you use this DMI differential. And we can see here the zero line is still green, the indicator is green, it's well above the zero line. So that gives you a clue that there's not going to be a big down movement right at the moment here. So as I said, depending on your style of trading, you might want to get out here, take your I think it was about 6 points of profit, take that off the table right here. Then if it starts up again, you can always go long again, or you can stay in the trade here till you get some better indication that the equity is going to start moving down. I tend to be more cautious, and I would get out of things up in here. I hate to leave money on the table or give money back that I could have had. So I think I tend to be a little more cautious in that regard. And getting back to this very clear trade here, you can see it's just up to where today's open is, these yellow dots right in here. And you can see an up triangle is formed here in the binary triangle. The DIX is green moving up here. The random walk oscillator, the dots have been green for a while here, and it finally starts moving up right here. And the Bollinger Band differential oscillator has crossed above its trigger line. I don't know how well you can see this, but the trigger line right in this area here, it's also just in the process of crossing above its zero line, and when it goes above the zero line, that indicates an uptrend. So I just wanted to post this configuration today just to show how obvious a trade can be using this particular setup of indicators with Renko bars. I wanted to show you one other little technique that I use occasionally, and that is I draw trend lines on the DMI differential and sometimes on the random walk oscillator right here. And you can see when these, I drew the trend lines between these two peaks right here, and you can see it crossed that trend line right as the equity was going above this price action trend line right in through here. Same with the random walk oscillator, crossed this trend line right here at the same time. So you can see the relationship here between price action and the triangle trend indicators. Now the DMI differential and the random walk oscillator look somewhat similar, but they look similar because they both are involved with measuring trends, even though the code is totally different for each indicator. The random walk oscillator is more of a trend strength indicator, and the stronger the trend, the higher the indicator goes. So you can see it reached its peak right here with this little uptrend, and then you can see this trend here was a lower trend, and it was not as strong as this trend. So the random walk oscillator peaked right here, and which is where I drew this trend line. And then when this was crossed right here, even though this was the same height as this, it was a good indication there was going to be a nice up move in through here. Now, incidentally, when I mentioned earlier, I probably would have gotten out here, but depending on your style of trading, you can stay in a trade longer if you use the DMI differential. You can see if you would have used the DMI differential here, this down portion of the swing cycle VB was a failed down cycle, and then it started up again right here and turned green again. And I also wanted to point out that the trend is always stronger than the cycle. So you can have cycles within a trend, and you don't want to just rely on a cycle to get you out of a trend, because you would be relying on a weaker trend indicator than this trend indicator and this one right here. So the swing cycle VB I find very helpful, but not necessarily as to when to get out of a trend that's moving up very nicely and through here.